Hey guys, what's up? This is Akanksha and welcome back to my YouTube channel. In this video, I will be talking about one of the core concept of technical analysis, that is candlestick charts. I will also be discussing about what a single candlestick represents and how can you read a candlestick chart. So make sure you watch this video till the end. And if you find this video helpful, then please give it a big thumbs up and also subscribe to my YouTube channel. There are so many ways to read a chart. You can use Japanese candlestick chart, bar chart, line chart, point and figures, etc. And the most popular approach is candlestick chart. So what is candlestick chart? Candlestick chart is used to predict the price movement of any stocks, funds or forex. It tells you about the market sentiments, whether it is bullish or bearish. This can help you decide your entry and exit points. On the screen, you can see the daily chart of Nasdaq, NSE and forex. The one thing common in all these charts are that they are candlestick charts. Now, how do you read a candlestick chart? A candlestick pattern basically looks like a candle with box and wicks. There are three things which makes a candlestick: the body, which represents the open to close range, the wick, which indicates the highest and the lowest price of the asset, and the color, which reveals the direction of the market movement. A green body indicates increase in price and the red body indicates decrease in the price. A candlestick shows how a stock have been traded over a certain period of time by displaying the opening, high, low and closing price of any stock. When you see a candlestick chart, they are generally green and red or black and white. The green candlestick shows that the closing price was higher than the opening price, and the red candlestick shows that the opening price was higher than the closing price. Let's say the opening price is 100 and the closing price is 102. So this is the body of the candle. The highest price on that particular day was 105 and the lowest price on the same day was 98. They are shown by the wicks, and from the highest point to the lowest point is the range of the candle. For a bullish candle, the open is always below the close. Now let's take an example of a bearish candle. Let's say the open price is 100 and the closing price is 98. This is called the body of the candle. The highest price on the day was 102 and the lowest price was 95. They are shown by the wicks, and the range between the highest point and the lowest point is called the range of the candle. So for a bearish candle, the open is always above the close. There are two things that needs your attention. First is the body and the second is the body with respect to the wick. Here the green body tells you that the buyers are in control as the close is near the high and the open is same as or near the low, and the price rejection is very short. And in the second candlestick example, you can see the body is very small as compared to the wick. So the buyers are weak and the sellers are strong, which is shown by the strong price rejection. This means the price went this high once in the time frame and then sellers dominated and pushed the price down to the closing level. Now let's see what are the different time frames available for trading. The beauty of a candlestick is that you can check different time frames to see the price movement in detail. There are different time frames to check the price movement, like 5 minutes, 15 minutes, 1 hour, 1 day, 1 week, 1 month, etc. Generally, very short time frames like 1 minute, 5 minutes, 15 minutes are used by intraday traders. Short-term traders generally use daily charts, and long-term investors use weekly and monthly chart to analyze the price movement. Let's take an example of Facebook to see the candlestick pattern in a real chart. This is a 1-day chart. That means it is 24 hours of price movement or 1 day of price movement. A green candle says that the price went higher after opening and the closing price is higher than the opening price. And the red candle shows that the price went lower after opening and the closing price is lower than the opening price. Daily chart shows the price movement from when the market opens till the closing of the market. Let's check out the weekly candlestick chart. It shows the weekly price movement. A green weekly candle says that the closing price is higher than the opening price, and the red candle shows that the closing price is below the opening price. Weekly chart shows the price movement from Monday morning till Friday evening. Similarly, if we check the monthly time frame, it shows the monthly price movement. The green monthly candle says that the closing price of the month is higher than the opening price, and the red candle shows that the closing price is lower than the opening price. And monthly chart shows the price movement from day 1 to day 30 or 31st of the month. So that was my video, guys. Thank you so much for watching this video. If you like this video, then please give it a big thumbs up. I generally make videos on finances, financial growth, investing and trading and topics around them. So make sure you subscribe to my channel and stay tuned if you want to watch more. I'll see you guys in my next video. Until then, stay safe. Bye-bye.